Hello everybody, in this video we'll be starting with the chapter number 12 of CMT level 1 and it is an introduction to volume indicators. Before watching this video, make sure to check the previous chapters. In case you haven't, then I've linked it in the description box below. In the previous two chapters we also saw the introduction to volume analysis and we saw a little bit more about the volume. Now we are beginning with the indicators of volume. This is a very tiny chapter and here we have just been given an overview about the volume indicators. So it is your responsibility to go and backtest and use the volume indicators in order for you to remember it well. So again, this is a very small chapter. I feel like it will take about 10 or 15 minutes only, and I will be showing you the indicators on TradingView as well. And since the chapter is small, we'll just use the book and we will read it together. So this is the Wiley CMT textbook. So the learning objectives are list the 7 types of volume indicators. We will be going ahead and studying about 7 volume indicators. Describe the major differences among the types of volume indicators. Fine. So let's start with this. Until now we have discussed volume principles. So let us discuss what are the general volume principles. High volume movements confirm the trend. If an uptrend is going on and the volume is also high, that is showing me the conviction in the uptrend. If a downtrend is going on and the volume is high, that is showing me a conviction in the downtrend. Low volume movements basically contradict the trend. What does that mean? If there is an uptrend in the market but the volumes are low, then that is contradicting my uptrend. So after some time the uptrend might just come to an end. It might subside, right? Volume declines in consolidation patterns. Whenever a consolidation is taking place, the volume must not be a lot in that, so that when a breakout or a breakdown happens, then the volume is going to be high. Volume spikes with the onset of a new price trend. Let us say that until now the market was crashing and the market was falling down. Now suddenly the market is going up and now suddenly an uptrend has come into the picture, and suddenly as the uptrend is going on, the uptrend has just begun, it has just started, and there is high volume spikes in the starting of the uptrend. So that is also going to show me a change in the price trend. That is a new price trend. Okay, so these are the general principles, basic principles which we have discussed so far. Okay. Volume indicators are informative in 2 critical ways. First, they should lead price, meaning that volume indicators often offer notifications before major price breaks or reversals. For example, when a volume indicator makes a new high or low while price does not, volume indicates in the direction the price may move next. Second, volume indicators should confirm price. Volume confirmation occurs when the volume rises as the price trends. Should the volume indicator fall as the trend matures? This volume divergence is a warning that the price trend may also be poised to an end. So we've just discussed this, right? When I was telling you about the principles, I discussed this with you. I just told you what a divergence in the price and the volume is also, right? So you need to make sure that the price is, the volume is basically following the price, and you need to trust the volume. If you are trading a breakout or a breakdown, you need to confirm it with volume again. And if you want the uptrend to be strong, then it should have a good volume as well. And if you want a downtrend to be strong, that should also have a good volume. Too often, though, investors and even analysts view indicators as a sort of magical phenomenon. They believe when a trigger line crosses the signal line, something in the underlying price is bound to happen. Another belief is that when indicators reach certain levels, the stock's trend will suddenly reverse or break out. In doing so, investors and analysts forget that technical indicators calculate information. Therefore, indicators should be used as information, not as the absolute truth. Volume indicators should be viewed as tools, each designed to explain a distinct piece of information within the greater whole, helping to sort out the noise. For any trade that takes place, 3 pieces of information are conveyed: the price at which the trade was executed, the time when it was executed, and the quantity of shares traded. So these are the three golden things every piece of price, volume, and the time when it happened. These are the three golden pieces of information. This results in a high correlation between the price trends and the price only indicators. In contrast to the hundreds of price indicators, all derived from similar forms of price data set, volume indicators offer a fresh, often non-correlating alternative to price only analysis. So every indicator which you have in your market is all based on the price. The only thing which is not based on the price is the volume. So you need to correlate both of them, and you want to see. Use some indicator for the price, use some indicator for the volume, and make sure that both of the things match before you enter into a trade. Fine. Volume indicators normally appear in a box below the price and volume chart. Typically, they are set by their own scales. So, divergence, you know what is divergence? Divergence means opposites. When the price is rising up and the volume is going down, that is a divergence. Okay. Now let's come to the types of volume indicators. So we are going ahead with 7 types of volume indicators. Okay. So what are these 7 types? Let's see them. The seven ways to differentiate between price or volume information create 7 categories of volume indicators. Pure volume. So what is a pure volume? Pure volume is a volume which is 100% pure. It does not include the price data. It is not including any price data. So volume rate of change. Volume rate of change is one such indicator which uses only the volume. It does not include the price data in the picture. That is my volume rate of change. Let me see if it's there on the free version of TradingView. Volume rate of change. I think it is there. Okay, look at this now. Now this is a volume chart, and this uses only the volume by itself. It does not include the price in it. So what is this? This is basically showing you that this is a very pure indicator. Why is it a pure indicator? Because it is based only on the volume and it does not include the price. So let's see it. Okay, now let's read what's given on Investopedia. I recommend you all to use the website Investopedia because it is extremely beneficial. So it shows whether or not volume trend is developing in either an uptrend or a downtrend. Very simple. Okay, so that's with my pure volume indicator. Now we have volume accumulation based on bar to bar price change. So bar to bar price change. As your bar to bar, as your from candle to candle the price is changing, how does your volume accumulate? So for this you will use your on balance volume. What is on balance volume? I'll show that also in your TradingView. So I'm removing volume rate of change on, that's on balance volume. So this is my on balance volume indicator. So you can see that whenever the volume is high, the on balance volume also follows through it. Look at this, there's an uptrend over here, and you can see the histogram showing high volumes, and the on balance of volume is also creating higher highs and higher lows. So that is my on balance volume. Let me see the pictures which they have given in the book. This is my on balance volume. This is my volume rate and volume rate of change. So you don't have to go into the detail of it because you just have to learn the names, and you should go and backtest and see which one works for you. Like for me, if you ask me personally, I only use the histogram, the volume bar charts, because that is very much enough for me. So volume accumulation based on bar to bar price relationships. Chaikin's money flow. So Chaikin's money flow is again one more type of indicator. I will show you that also. Chaikin's This is my check-in money flow. So how do people basically use check-in money flow? There is a middle line, and whenever it is above the middle line, they say that it has high volumes. Whenever it is below the middle line, they say that it's having low volume. And whenever the CMF, the check-ins money flow, is near to the line which is 0, when it's near to this, people say that it is in a consolidation range. So if you look at this, here the volumes were also creating higher highs. Here also the volumes are high, but when it came down, the volumes were low. This showed us that the market is not going to go in a downtrend. That is why the volume was here. And look at this, the moment the price came down, if people wouldn't have seen this, then they would have thought that the market will go further down. But what really happened is it didn't go down, and it boomed up, and there was a big price move over here. So you can always get an early signal, and you can save yourself from losses if you use volume indicators. So this was my Chaikin's money flow, or my CMF. Go and backtest it by yourself. Okay, so the first one was pure volume, which means volumes which do not use price data. So example is volume rate of change. The second thing is volume accumulation based on bar to bar price change, which is on balance volume. Volume accumulation based on bar to bar price relationship. Example is a Chaikin's money flow. Next we have volume price range indicators. Volume which is based on intraday price range, for example ease of movement. Price accumulation based on volume change, positive volume index, tick volume, which is also for intraday, tick volume money flow. Volume adjusted price indicators, volume weighted price base participation, MFI money flow index. This is how my money flow looks like. This is my Chaikin. This is my volume. So they have just given you the names of the indicators and overview of the indicators. Just make sure to backtest it once and just see, so you have an idea of all the volume indicators, even though I have discussed most of it in this chapter. Let me again just show you the pictures of it. So this is my on balance volume. Okay, look at this, is the price chart which is given above, right? So this is my on balance volume. It looks like this. Volume rate of change looks like this. Chaikin money flow looks something like this. Money flow looks like this, and volume charts look like this. So I hope you understood this chapter. This was a pretty basic chapter wherein you just got introduced to volume indicators. In the next levels you will be studying them in detail, but that's it for now. Thank you.